Alright guys, welcome back. So, today's gonna go down in infamy. Uh, they're insane. They've lost it. I mean, I said they were gonna do this, but man, are they doing it quickly. It's helicopter money. Literally. We have helicopter money. I think this week, 9 trillion, that's with a T, will be just made out of thin air. And I mean, tax cuts, everyone's gonna get a check. Like 2 weeks from now, you're gonna get mailed a check, like $1,000 or something. And repo operations, infinite repo operations, not QE, of course. And what is it? 1 trillion a day for the rest of this week. Today is Wednesday, right? Or is it Tuesday? I don't even know what day it is. So what else? Just endless bailouts of Boeing, everything. Everything under the sun. The repo operations is the bailout of the banks. I know I'm missing something. This is my Instagram. I can't even. I mean, this is nuts. I mean, even Leisman said infinity QE, which is, I coined that term. I posted that weeks ago. But now everyone's saying it. The bond market is spiking. So the bond vigilantes smell blood, because, I mean, when you just double the balance sheet of the Fed, I mean, and just print 9 trillion, why would you hold bonds? Why would you hold dollars or fiat? I mean, every country is doing this. So we're having a global debt monetization bonanza here, helicopter money. So everything all around the world is going to get more expensive. Maybe not for like Russia, because they have like no debt. And so far they haven't been hit hard. The gold bugs are like, I see by the end of the year at least $2,000 gold. And you have to understand, these people have been holding their bags for like almost a decade. So they don't believe that it's actually happening, or they just, they're so conditioned to think that there's not going to be a moonshot past all-time highs. Like, by the end of this year, I mean, a minimum 2,700 an ounce. And silver, I don't know where that'll be, but it'll be much higher from where it is today. By the way, the smash on metals, the margin calls and all that, that was a gift from God. Like, this is the dip to buy. For physical, especially. In my opinion, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Could be wrong. I'm not always right. But you should consult them before doing anything. Stocks, everything, extremely volatile, extremely risky. If you don't know what you're doing and you leverage up, you're going to get wiped out, which I almost experienced. But I was lucky because I put on large short positions. And I talked about that in my last video. But I'll talk more about that. Anyways. So, the fractional reserve lending system, like a bank only needs like 10% or something like that to lend out. So when the bank lends out $300,000 to you so you could buy a home, they only need like 30,000 in their reserves. So essentially they made up 270,000 out of thin air. That's and that compounds through the economy. So now you have an asset supposedly of worth 300,000, and then that goes up in value, and then you could take out a home mortgage against your own home, and then you just made more money into thin air, and on and on and on it goes. And that's why it's a Ponzi. Everything's a derivative of itself, and that's why they just literally printed 9 trillion this week, are going to. And this is probably not even the end of it. This just might put in a bottom for now, for the intermediate term, for next few months, maybe going into 21 or 2022, something like that. I mean, and then Trump, I just heard on the news, they're expecting 20% unemployment. And that's why they're sending out checks. Well, that's still going to happen. I mean, small companies are going to get loans. If I'm going to go try to get another loan or something and just go buy physical with it. That's what I'm personally going to do. I mean, this is nuts. He pretty much took the Burns student loan forgiveness. I mean, like I said in my last video, are people going to go back to paying their student loans after not having to do it for a month or two? Probably not, especially if a lot of them lose their jobs. So, I don't know, guys. This is, it's crazy. It is crazy. Let's take a look at the yield curve. So we officially hit below that red line of no return. We're going into recession for sure. Yield curve. Wait, let me take it here. Here's a larger graph of that, the 10-year to the 2-year spread. Awesome indicator for the last like 7 recessions, the business cycle that's created by the central bank. And let's take the yield curve. Is this not moving? All right, so here we go. And I showed you guys this, how the yield curve inverted on the bonds. Like pretty much the interest rate went higher on shorter term debt, right? The interest rate on them went higher than the long term, and now it's reverting back to normal, and that's when the plunge happens in the stock market, just like it did in 2008. So let's just do this one more time. Here's 2006, and you can watch it move on the left here. So the tail end is the 30-year, and then the beginning of it is a 1-month government debt, right? Bonds. And then we're in 2006. So here's what happened in 2008. So it's inverted right here. And now it's normalizing, but this is the recession. This is the stock market crashing. And now it's 2009, 10, 11, 12. This is normal yield curve, because long-term debt should have higher interest because you're holding it for longer. 2015, 2016, 2017, 2018, it's starting to flatten. 2018, 19, it's inverting, and then boom, we just crashed like this past few weeks. So let's cover some news, then we'll look at the futures, because I think they're pretty red right now. And then I'm going to talk about what's about to happen with gold and silver. So 1.2 trillion package to fund stimulus checks. Wow. Delayed tax payments, that's good. 1.2 trillion stimulus checks? I mean, how much are they gonna give us? By the way, I'm going to grab that and I'm just going to buy instantly. Here's what I think is going to happen with these checks. So big ticket items, and they're idiots. They're going to create inflation, but it's not going to be inflation in everything. Because we've had inflation in the stock market, on cars, on homes. Big ticket items have been inflated in the past years, in the past 10 years, right? 11 years. So big ticket items, homes, cars, luxury stuff, just big things, they're going to fall in value. But small things and things you need, food, toilet paper, your utilities are going to go up in price. Rent might go up. Well, maybe rent might drop. I'm not sure about that because that's actually, I think, more local where you live. Because there's a lot of people fleeing from certain cities going to other cities. That's actually local. Even with some of the housing, local cities it's gonna matter. All right, some states don't have state taxes, right, and the home values in those states are going higher because people are fleeing out of other states. What I'm trying to say is, overall, on the average, homes have been in a bubble, and that's bursting again. Cars have been in a bubble. The used cars, they're already dropping in price. So the car auto bubble is bursting. But I think clothes, food, just everyday items, the prices of those are going to probably start shooting up. So how much are they going to give out? Plan worth. So, should I read this? I'll read this. 1.2 trillion stimulus plan according to CNN's blah blah blah. Tuesday, White House Mnuchin now discussing stimulus plan worth $1 trillion per source familiar, adding initial estimates of $850 billion increase after budget crunchers. Blah blah blah. $500 billion will go directly towards checks for Americans. So $500 billion. So I don't know. Divide that by 330 million or less because a lot of them are babies. Mnuchin doesn't expect checks to go out before an end of April, according to Politico, saying we're looking to sending checks to Americans immediately on Tuesday. Meanwhile, Mnuchin also announced that President Trump has signed off on allowing the deferral of $300 billion in payments. So how much would that equate to? I'm just really curious. Meanwhile, President Trump told reporters that he hoped to send $1,000 to every American. So, use that for what you need. And it's funny, though, because a lot of things are going to be closed down. So a lot of that money is just going to paper over, 1 week of salary, or some people 2 weeks. It depends how much you make, right? And that's a week's worth of pay that you're... Well, they're also rolling out pay, so they're also somehow gonna pay for people who are sick and can't go to work. But people like servers, this gig economy, Uber, Lyft drivers, servers, bartenders, millennial jobs, right? They're just not gonna make anything until this lockdown is lifted. And that's probably, this isn't gonna cover that, right, for them. It is what it is. And I told you guys, the U.S. economy, most of its service sector, I'm not saying bartenders and waitresses, but I'm saying people shuffling paperwork around in cubicles. Now, I don't know if the entire U.S. is going to be a nationwide lockdown. I don't think the economy could handle that. They're going to have to print another 10 trillion. That's like 20 trillion. I told you guys 10 trillion, didn't I? Of course, they're not going to They're not going to say 10, so they'll do 9 now and then maybe a little more later. Or a lot more. It all depends how much of a lockdown this will be. In New York, they're already doing it. The guard's coming out in Texas. So I think it's going to go, and it's up to the state. So the level of competence of your state. Now New York and like San Fran and Washington and Cali, I understand why they would have the guard and complete lockdown because the populations there, the population densities are just unreal. I want to bring back the population density map because I'll bring back the populate. You know what? Give me a second. I haven't seen anyone do this. Like, look at population density. Like, nobody. And I want to take credit for calling it QE infinity. I mean, maybe, I'm sure other people have said it before me, but I don't know of anyone. So here it is. All right. Oh, come on. So wherever you see these blue blotches, probably gonna get locked down. I mean, because they have to. Now I get it. People are worried about losing freedoms and blah blah blah, and this is not. I mean, this is a libertarian's worst nightmare, and it is. I don't trust them. I don't know how long they're going to keep this, or if there's constant roadblocks after this for like months and years. Who knows? But they can't do it for too long because the economy, everything would just completely fall apart if they did it too long. But for 2 weeks, a month at the most for certain areas. Now, here's the thing with NYC having this, it's going to affect the stock market. So the stock market could just keep falling because of it. I mean, are people going to just trade from home? I am, as long as they keep the market open. I hope they do. I need something to do. I mean, this is a good time to build that home gym, guys. You better start ordering some gym equipment now because you're going to get bored. But hopefully, most smaller cities, there's just curfews and a lot of businesses just shut down, take a break for a week or two, and then just stay home, you could do self-isolation. You don't really need enforcement in the smaller cities. But these super densely populated areas, I mean, I get it. I mean, maybe the guard will just give out food and stuff. I don't think they should have any weapons, right? They shouldn't. No need for that, I don't believe. Unless things get really wild and crazy. Okay, so the only way things would get really wild and crazy would be if, like, the banks stop spitting out, like, total just supply chain and financial, which I don't think that's going to happen. I think we'll get through this in the next month or two. It's just going to be uncomfortable, right? And yeah, I mean, there will be more, crime and stuff upticking during the night, but I don't think it's going to be, Mad Max, all right? I was thinking that prior to this, but there's that stages of people. So for us, because we've known about this for over 2 months, we're way more calm about all of this because one, we've got everything we need. And we're more calm and we could think more rationally than your average person who's like really, really worried and freaking out right now, especially with the retirement just going up in smoke. So let's zoom out and take a look at the rest of the world. What does concern me is Italy. I'll get back to the financials. I just want to cover this for a second. Spain as well. But their the rate of people who pass away, because I can't use certain words, guys, is pretty. It's really high. Now I get it; they have a lot of old people, so let's hope it's skewed, and their medical system just really doesn't work great because, well, it is socialist. So now I could argue that most healthcare systems around the world are socialist at this point, even the U.S. But but you guys can look this up. Just type in world density, population density map. I mean, some of these areas are just gonna get hit really, really hard, and they're going into full blown lockdown now. So the U.S. is pretty much what a week behind Europe. So probably not this weekend, but the weekend after. I mean, we're already seeing the major cities go. We're gonna start seeing smaller cities in the U.S. Now, will it be a full blown lockdown? I don't know. We'll see. Here's the thing: if there is a full blown lockdown, the stock market's just gonna keep crashing. So they can't really do that, in my opinion. I don't care how much they print. Like there's nothing moving or happening. The GDP, Goldman Sachs already came out and said it's like -5 GDP for next quarter. No, it's probably gonna be like -20, 25 more. I mean, when your entire economy shuts down, like 80% of it, GDP goes negative, like equivalent of that, pretty much, right? Should. All right. So what else? I mean, ports are... So I have inside sources telling me that China's going back to work right now. And I've had multiple sources, not just one or two. And they have friends. And thank you guys for sharing that information. So that puts pressure on the West to get this under wraps and get back to normality, because that's a huge sign of weakness, and for especially the U.S. And listen, guys, I've given you guys my speculation. I'm going to tell you guys what I think, because as days go on, we get more data, and it becomes more clear and evident what has happened here in the past few months. For one, is it bad? Let's call it the nano zombie, because that's what it is. I can't say certain words on here because they'll nuke my YouTube channel. I call it the nano zombie, and that's what I forgot to call it like last week when I was making a video. It's a nano zombie. Why is that? Because it's not really alive until it gets inside your body, and then it kind of becomes alive and replicates and makes more of itself. But it's dormant and just lays there kind of dead. That's why it survives for days. So the nano zombie, it's bad, and there's mutations of it maybe, and maybe it could come back and it could be worse. And yes, it exists. Now, mainstream is definitely hyping it up now and scaring the public, because you have to remember, never let a crisis go to waste. These are the times to take what's left of your freedom and just turn you into so you have to watch out for that. It's the Trojan horse. Now, theory-wise, this was not accident. Probably not. Well, it was made. It is human-made, that's for sure. Is it an accident? I'm not fully sure, but it doesn't matter. Could it have been released on purpose for an attack? Yes. And that is I give that a 60 to 70% likelihood, and then the rest is it was just incompetence and an accident. It's on my Twitter. They definitely stole it. So I'm not sure if it was released on purpose or if it was an accident. But even if it was an accident, then they, use it as a weapon afterwards. Well, it's released. All right. Well, let's take this as an opportunity to this will weaken our nemesis now, because the U.S. and China they've been in economic warfare, well, and other types, cyber and this and that, stealing patents and military patents, stuff like that, because the East is on the rise while the West is on decline, and this is just macro cycles of empires. All right, and I've talked about that. Now, where do we go from here in the future? I don't know. Can it get hot? Can it become a hot thing? A hot battle? I don't want to say the other word. I don't know. I'm not a prophet. I hope not. That would be horrible. But if the U.S. becomes extremely weakened and has, let's say, hyperinflation and the debt just... then China, might make a move. But as long as the citizens have self-defense, they can't take over, in my opinion, or come to your land. This sucks. I have to talk in like code. So these are my thoughts so far. But listen, the elite of the world, which are in every country, come from all shapes and sizes and forms. I feel like they're more allied with China. So you have to understand, guys, there's different factions of elites as well. Like, some are pro-US, some are anti, some are more globalized. Get it? They want globalized. And the way they could usher that in is through China. If that makes sense. I know it's a little complicated. So, this is good, the way Trump administration is trying to handle this. They're going to put up tents everywhere at your local Walgreens, CVS, Walmarts, and Costco's, which is good. And everyone's going to get... Now, the numbers are going to explode in the U.S. and it's going to scare people. Also, probably going to scare the stock market. So, we're going to look at some TA, although TA is hard here, but... although TA, listen, you know what's hilarious, right? If you guys remember, I don't get credit for anything because I'm so small, which is fine. I don't want to be too much any larger than I am right now. But I just, I never get credit from other people because I've been timing this damn thing really, really well. The only thing I didn't time very well was the crash in gold and silver price this past week. But it's temporary, guys. I call that volatility. All right? For a swing trader, all that is just a enormous drawdown in volatility. I wish I did take more profits, but whatever. Anyways, but I did call the top to the stock market, literally, to the month. Am I going to get credit for it? Of course not. But I don't care. It's all about making money. So... because when I go to events, people go, that guy called the top in Bitcoin, or that guy called the top. And I'm just like, so did I, but I actually called it to the week and day. And they just, it's, it's annoying. And, there's the other people, like Peter Schiff and some of the other guys, they get credit for calling it for years and forecasting it way ahead. Without them, I wouldn't have known all this. They get the credit. They're the geniuses, okay? Of course, they've been calling it forever. I'm more of a trader type of person, right? So I want to get credit for calling it to the week and day. So Jim Bianco, this is one of the biggest moments of truth in financial market history. What he's referring to is, can the Fed save the market with this crisis? And this is the moment where, will the Fed just shoot all its bullets and then it's not enough? So what do they mean by that? What they mean is, if they keep doing all this QE, like trillion upon trillion day after day, which is what they're doing this week, 9 trillion, if that's not enough to stop the market from falling, and then all of a sudden the dollar falls and tanks, then it's financial, economic, like Armageddon. and then the bond market blows up. That's what I'm afraid of. Luckily, the US isn't the only one doing this. The entire world is doing this. So people don't have anywhere to run for safety except gold and silver. And I think cryptos are just highly risky, all right? I don't think they're safe havens, guys. They fell more than the stock market and metals when everything was falling. The thing that fell the least was gold. Silver fell a lot because silver is viewed as an industrial metal, not so much as a safe haven, but that's going to change because that gold and silver ratio is like at 100 or something insane right now. And it's the poor man's gold because you're not... Oh, by the way, there's shortages already at the stores and everywhere online for physical. You can't even get it right now, I think. Or if you do get it, it's like 2 months from now. So what does that tell you? The futures markets have decoupled, just like in 2008, from the physical, and this signals a huge bottom. Also, the mining stocks for the past 2 days, today and yesterday, because markets are closed now, it's 7 p.m. U.S. Eastern Standard Time, March 17th, by the way. And what was I saying? Yeah, the mining stocks have been rallying for the past 2 days, while gold has been going up slightly, and silver, yeah, it's bounced now. It's put in the bottom, I believe. Yeah, and the VIX, I mean, it went to like 90 something. So I'll come back to this bond market news. Let's get to some charts real quick. All right, first of all, here's the futures. So the Dow is down 528 points right now. Just a few hours after the close. It closed up, I believe, in the green. S&P's down 61. That's not too bad. NASDAQ is down 186. Look at this. Gold. It's above 1,500 finally. And it's at 1,540. Silver. It's at 1277 and it's rallying right now. Where did the market close? Yeah, the market closed up. It was a nice bounce. All right, let's go to some charts. Hold on, give me a second. So, this would have been an awesome trade. No, the VIX actually only went to 84. It's the volatility index. You could trade that, but when that thing dumps, it dumps even faster than it rises. So you have to be very quick in and out, guys. Although this one's lasted a few weeks, so whoever caught that, good for you. You did about a 6, 7x. Depending when you bought it, of course. Check this out. This is what I think is really important here. It's the dollar index. So dollar versus other fiat currencies. I think it just peaked out. Don't quote me on that, but this is my opinion. I think this is it. I don't think it's going to go any higher. I think we're going to go test the 94, 95 handle, and once it breaks that, that's when we get that moonshot in gold, where it makes a new all-time high, like maybe in the next few weeks or months. And the gold bug's like, oh, it's. I already talked about that. I think we're gonna make a new high and then higher going into the rest of this year, spring and summer. Because I think this 9 trillion will possibly put in the bottom for now, but as cities lock down and stuff, They're probably going to have to do even more. And if we look at the Fed's balance sheet, I should have brought that up. So Fed's balance sheet, Fred chart. I hope I could find it. They dig it. You know, not dig it. You kind of have to dig for it because they hide it like behind a bunch of links. I hope this is it. Of course. Fred chart. Should have prepared this, I forgot. This is the St. Louis one. Alright, here we go. Just give it a second to load. You know, you guys could go in the right hand corner on the bottom and make the video go quicker. You could speed it up 25, 50, 75%. So, you know, if I'm taking too long. Yeah, look at the balance sheet. Come on, this has to be much higher. I mean, by Friday, this will be at new record highs on the Fed's balance sheet. And this doesn't include repos, guys. And then they let it run off, and then with the repo operations, very sneaky. Very slowly, they just kind of leave money for the banks. Someone has to do a spreadsheet on it and keep tabs on that. I know someone's doing it out there. I don't have the time. All right. So yeah, the dollar. All right, let's take a look at the markets here. It's the SQQ, Apple, and here's all the big FANG stocks. They fell a little more. This would have been, and I gave you guys a good opportunity. I told you guys these are ripe for a nice short position. So whoever took advice on that, good for you. The private members, I mean, I gave them like a list of possible opportunities to short. Some of them made us a ton, hundreds and thousands of percent if you know how to options trade at least. Here's the NASDAQ. Dow, yeah, here S&P 500. S&P bouncing off my blue equilibrium line. A lot of them are bouncing off the 200 week moving average. These are weekly charts. The Dow Jones fell below the 200 week moving average. Where's my blue line on this? Let's see if it hit my blue line. And you guys get this in the private group. It's not on here. It's on here though. Let's do a weekly. Did it bounce right off of it? Yep. Look at that. This is why they have professional TA experts at all these organizations like the Fed, guys. They time these perfectly. And that's why they're coming out with just record stimulus. I mean, this is like 3 times larger than at the worst of 2008-9. All right, this is all the QEs rolled up in one. This is more than all the QEs ever rolled up in one. And that's to put in a backstop and put in a bottom to this freaking market. And if it keeps falling, that's when shit really hits the fan. So they'll do whatever it takes, guys. If 1 trillion every day this week isn't enough, they'll do more. And we're going to get a nice, some sort of bounce or rebound, right? Now, hold on. Let me show you what I think is going to happen here. We'll get one of these, right? in the next few weeks or months. And what is that going to end up looking like? I think it's going to end up looking like this. The bull trap. This is a bull trap. Right? And at the peak of its return to normal, everyone thinks everything's okay. This could be late summer. This could be next fall. And then that's assuming that the nano zombie subsides and it gets under control, which I think it will. I don't think it's as bad as we initially thought. I think they're going to get control of it. All right, guys. As of right now, I could change my mind, but with the isolation and everything going on, it's probably going to get they'll get a control of it. And that's just that. There are really not that many people who have fallen victim to it in the grand scheme of things. So maybe it's not as bad as we initially thought. I'll keep you guys updated. I do have good news. I posted in the newsroom. The link is below this video for the Telegram newsroom. It's free for everyone, right? So, you know, the hyperwave theory, this is the bubble chart. 1, 2, 3, 4 on the way up. 5 is the crash. We are pretty much right here. 6 and then 7. But we might not get a 7 if we end up like Venezuela. I don't know how that's going to pan out. They'll do something. So, and then here's the 1929 Great Depression crash. All right. And then if I wanted to draw it on the weekly chart here of the Dow Jones, if I zoom out here, it would look something like this, right? Maybe they'll keep it trading sideways for some time because they'll do whatever it takes to manipulate the living crap out of this. And then, I don't know. If there's high enough inflation, it'll either do one of these, go straight back up into a hyper bubble, or down she goes. And then we go back to a gold standard. The rest of the world does it. And this was the largest bubble in human history. It's been guys, we're living in the best times ever to be a part of this, if you think about it. And then if we just get through this and we survive this financially and everything, this would be a good time to create a business that could survive the greatest depression ever, right? And then we'll later in our lives we might end up being very well off, but it's probably going to take a few decades to get out of this rut. So that's why it's crucial you survive and make as much as humanly possible off of this, because afterwards it's not gonna, easy street's gonna be over with. Of course there'll be opportunities. The biggest opportunities will be, you know, in the next few years and decades, because when there's blood on the streets, right? And that's when you could get apartment buildings, homes, you could buy a business, you could start a business dirt cheap if you have savings from holding, you know, metals. And that's when the biggest fortunes are made and started. All right, that's the big wealth transfer. This right here. Wealth transfer. And you want to get all of this money right here to go into your pocket. Here's a pocket. Okay? And then you could, later I'll make videos of revenue streams, you know, residual income and passive and stuff like that. There'll be more opportunities. It's never the end, alright? I hate the doomsday people. So, although it's always nice to have a bunker. I think, I mean, honestly, I really wish I had one right now, but I have friends and cabins. But I mean, if I was super rich, of course I would go. I would have like the car ready and everything to go to my bunker. It's always good to have one of those. But I don't think we're there that yet or anything like that. The time when you will ever really need that is like an EMP from the sun, or from, you know, just, you know, every country nuking each other, but at that point, you don't even want to live through for that. But I don't think that's ever going to happen. Here's the mining ETFs. These are daily charts. Look at these rebounds, guys. These are awesome. Look at these rebounds. And if you bought this dip, I literally bought the dip to the, like, within, like, 20 minutes of the bottom for all of these yesterday. And I added more to my position. Because I could add more. This is different. This is an inverse ETF. But I could add more to my position because, well, I take on more leverage. So I'll buy like a 3x bull ETF and then it prints me money, literally. And then as it makes me more into my account, I could add more to other positions. I could put on more call options. Now, that is super risky, but it depends on your position sizing, right? So when I'm doing that, it's like, you know, let's say every day it prints me $1,000. Well, you know, I'll take 200. I'll put in non-leverage. I'll take another 300, put a call, and then I'll take the rest and just put it back in, and then it prints me even more. But that is super risky. And believe me, I learned because I totally lost like 90% of like a giant position on this dump, right? And this was it right here. Because I held like an idiot because gold was looking strong, and all of a sudden it just dumped. But it's okay. I met the margin calls, and because of my short positions made me so much, I covered the margin, and I even had more profits left over to buy the dip. So it's kind of how professional kind of does it. Although there's a little bit of luck involved, but not really. I mean, I knew the market was going to fall because of this nano zombie, right? So it was strategy. I knew. So we'll look at M2 money supply and all that in some other videos. That's pretty much all I have for right now. Gold, I mean, it's going up. Let's take a look at gold real quick. Listen, I'm bullish. I think investors are starting to realize that the Fed is stuck printing until infinity. I mean, Leisman in his cabin somewhere out in the woods, like the two anchors, you can see who really kisses a lot of ass of the elite. They're like hunkered down. They don't have to be in the studio to catch it. They're out like in some cabin. When you look at CNBC, it's hilarious. What was? That's not gold. Where is it? Oh, here we go. Oh no. Here it is. Oh, here's other ETFs. They're rebounding. V-bottom rebounds right now, guys. It's looking great. And for the private members, I mean, this is when like life-changing stuff is done. Now, so a lot of people, you know, didn't buy it because they're like, oh, it's a falling knife, and they're freaking out. But this is when years of experience comes in. When your emotions, you have no emotions. I sleep fine, guys, and it's really weird. On that one drop, I lost like literally half of my life savings, and I'm just like, all right, whatever. I'll be fine. All right, so, but I have high risk tolerance. For the rest of you, physicals, and just hold long and relax and just watch it for the next few months and years. All right, so here's gold. You have to know your own risk tolerance and emotions and experience level. If you don't, and you take on too much, you're going to get wrecked. You also have to understand position sizing. So know your weaknesses and strengths, guys. Here's gold on the weekly. Oh, beautiful. Beautiful hammer. Oh, guys, this is great. I mean, if we open tomorrow at 1600, testing 1600, and then later tomorrow we get above 1600, it's a moonshot. We could see it, finally, the big one. The moonshot. Your mining stocks explode. Life-changing event. And I may have caught it. Literally to the minute. Oh, this looks great. The daily chart of gold here, we're on a 6 count to the downside. And we could get to an 8-9 count as long as we stay below. I don't know. It doesn't matter. It's shooting back up. It's bouncing off the 200-day moving average as well. Just like I called it in the private group. RSI, all the oscillators oversold to the downside. Let's take a look at silver. Weekly chart. I mean, this looks just devastating. I mean, unbelievable. But you know what? It's over with. I mean, we're done. I mean, it's not going to fall any lower, guys. I don't think it's falling any lower. I mean, it hit like... Is this an all-time low? What is this? Well, it's all-time low in the past decade. Yeah, I mean, where's it going to go? I mean, I don't even care if it goes to $1, but I'll just load up. It's not, because there's already shortages on the physical side. Watch someone ask for physical delivery on the COMEX and it blows up. By the way, this is perfect with... I mean, it's not perfect, but the 200-week moving average is crossing my blue equilibrium line like right now. So I'm expecting just in the next few weeks, it's going to go straight back up to like $20 and then higher. Now, the mining stocks destroyed. And if you bought that dip, this is when you see like huge gains. When it just runs up to $20 and then it's going to run up to hundreds. So life, like, if you bought that dip, man, are you lucky. On mining stocks, on the right ones, on the right mining stocks, or ETFs, if anything, ETFs. If you just bought a few ETFs of silver, I mean, I think it's gonna work out for me. Consult your licensed financial advisor before doing anything. All right. But TA wise, this is just a knee-jerk reaction. It's volatility. I think I'm done for now, guys. I guess I'll look at it. I'll look at Bitcoin. Because there's a bunch of people on Twitter like, what about Bitcoin? I know it bounced. I think it's just trying to keep up with metals, but I don't think people are going to risk it because we're going into a recession. The money that's going into metals is institutional and Wall Street. Will Wall Street go into Bitcoin? I think it's actually less likely, to be honest. The 4-hourly looks negative. Let's go to the daily. Although I did put out for the private members, it was on a 9 buy on the daily. And I mean, this looks like a bearish pennant or flag. Let's go to a weekly. Hey, bounced off my blue line, I won't lie, on the weekly. So this is a bullish candle on this week. It's turning into a hammer. Alright, I mean, it might rebound a little bit. Will it get back above 10,000? I don't know. I don't think so. I'll take profits up around 9, 10, up in this area. And I think it's going to do one of these. And then trade sideways for quite some time. Right? Let me zoom out. Something like that. A giant wedge. Not a wedge, but a triangle. Does look like a wedge. I don't like wedges. I don't use wedges. they don't work, in my opinion. For technical analysis, TA charting wise, something like that. All right, guys, and that would take you into 2021. I think that's it for now, guys. Smash some likes, leave anything in the comment section, visit my website. Should pay for itself, or you'll learn a lot, if anything. And it's a great group and community. What else? Smash some likes, hit the likes, share my videos. That's the only way my channel grows. And check out all the links below the video, and check out all the free chat groups, this and that. Until next time.